A lot of people are afraid of trading news, and rightly so. Moves caused by news are fast and they can cause massive slippage. Retrace reversals are based around trading news, but they are not about trading news releases. You're going to be trading these hours after news. The impact that news has on price is often short-lived. So let's say price is up here on Euro USD, then some major news is released. Often price is going to spike down fast, or maybe even over the course of a few hours. But after that initial spike down in reaction to news, things start to slow down, price starts to stall, and with time it comes back to where it was before news. This obviously doesn't always happen, but it happens a lot, and we can take advantage of this. Retrace reversals can actually be either counter trend reversals or continuation reversals. They are a special category of reversal trade. They are not common at all, but they are very high probability. So let's very quickly break down the price action behind this type of reversal. You pretty much already know this, but there are a few slight differences. We see a bearish trend here that broke right through support and kept moving down. It was clear that sellers had control of price for this entire trend. Then all of a sudden you see this massive single bullish candle. All this ground, which took several bearish candles to gain, was retaken by a single bullish candle. This clearly indicates that buyers are in strong control of price. And why? Well, because news was released. News came out, the numbers were surprising, and it caused buying and exiting of short trades. This led to price rushing up a lot in a very short period of time. After rushing up, price stalled on resistance and indecision formed. This indecision candle had a strong upper wick, small lower wick, and a small body. This indicates that price is undecided. You already know this. When the next candle opens up, it starts pushing back down. This trade could have been entered here with a stop loss here and a target here. As you see, price would have fallen and hit our target. Why? Well, price was heading down originally. Sellers were in control of price. Buyers took temporary control of price in reaction to a news release. However, these moves are often short-lived. After price rushed up and created this bullish preceding trend, and even though this is a single candle, it's still a bullish preceding trend. A preceding trend can be a single candle because if you move down to a smaller time frame, then it's going to be several candles and it's going to look more like a trend. But that's not the important point. The important point is that when you're talking about preceding trends of a reversal or a preceding trend for a reversal trade, it can be a single candle. So after this rush up, buyers start to get weak and sellers regain control of price. So it switches back to what it was doing before, essentially. So when you see these big spikes caused by news, keep a close eye for indecision forming on support and resistance. This could be a sign of an imminent retrace back to pre-news levels. So like I said, retrace reversals can either be continuation reversals or counter trend reversals. You would categorize a reversal trade as a retrace reversal if the preceding trend is caused by a news spike. So if news comes out and it causes a big massive move and price stalls on top of a support resistance area, you would class that as a retrace reversal. So that covers the 3 types of reversal trades. Let's quickly review them. Number 1 is the counter trend reversal. These reversals are the most common. They form when price is trending down or up and stalls at support or resistance. These setups will look like this. 2 is a continuation reversal. These reversals are not as common as counter trend reversals, but you will still see them pretty often. These types of reversals form when price trends through a support and resistance area, then it pulls back down or up to that area and forms indecision. And finally, 3 is a retrace reversal. These kinds of reversals can be either counter trend or continuation reversals. They appear due to major news releases or unexpected news. When news pushes price quickly up or down, you'll find that price returns to pre-news levels quite often. Now that you know the 3 types of reversals I take, it's time to set some rules in place for identifying and trading these reversals.